In this video, I want to go over two different types of setups. The first one is a setup that we plan for, and the second one is a setup that we can't plan for, but that just gets developed during the day with the market movements. I want to go over two different trades that I took. One is going to be for each example, and you're going to understand it a little bit better. And an exercise I want you all to do is after you understand the concepts I'm going to explain in this video, I want you all to go back into your journal. If you don't have a journal, you're at a severe disadvantage. And I want you to see the trades that you take, which one fits the best of what I'm going to explain. And the one that you have the most success with, I want you to scale it up and focus on those the best and the most. And the ones you don't have the most success with, I want you to maybe avoid completely, trade less size, or just figure out how to make it work better for you. So you'll see what I'm talking about. I'm going to go over two setups that I took so far this week on the S&P 500. But before we get into the trades, I'm going to post a link in the description below to follow me on Instagram at Investitrade. This is my only account. I definitely recommend following me on here. I post daily trading recaps along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. The link will be in the description below. You're seriously missing out if you're not following it. So the two types of setups, the first one that we have is ones that we plan out prior to the market being open. Whether you chart the night before the market opens, an hour before the market opens, or even during the weekend, it really doesn't matter. I basically chart all my setups the morning of, about an hour and a half before the market opens up. That's just what works for me the best. Sometimes I'll chart them on Sundays when we do webinars with Investitrade members, but it doesn't really matter. These are just setups that you plan out before the market opens up. You come up with your levels of interest before the market opens, and then you have to be patient enough to wait until the market tests those levels to give us clues about the market auction to play long or short. To understand this a little bit better, I want to go over the pre-market plan. I post these every single day in my Discord, setups I'm watching, levels I'm looking out for, and potential trading scenarios. These are my own plans that I am personally watching to trade off of myself, that I post for other members in the community to see, that I plan out for before the market opens up. So that's the first setup. Here's an example on the S&P 500, and this is an actual trade that I took. So what I was watching for was the 4118 and 3/4 demand zone down here. I'm hovering my cursor over it now. The market sold off into this level at the overnight session and bounced off it. This rally to the upside formed new demand at 4135. So in the pre-market plan, what I was watching for was a possible inverse head and shoulders pattern if a pullback holds and we find buyers at 4135 or 4118 demand. If this is true, I'm going to be looking for a move into 4159 supply above, which could be used as a target. We also had a bearish plan, but that was irrelevant in the setup. So this is what I'm watching before the market opens up. This is planned out for prior to the market being open up. The supply demand zones are my levels of interest, and I wait until the market tests these levels for me to play long or short. So what happens here is here's our inverse head and shoulders pattern. We have a left shoulder right here. Zoom out again a little bit. Left shoulder, inverse head. And what we were watching for was a pullback into this demand zone to form a right shoulder inside of a demand zone for the market to play long if we could spot buyers at this demand zone. So essentially what happened here is the market missed the demand zone in the first 2 minutes and rallied about 12 points. And then as soon as we came to 4146, 4147, if you were watching the time and sales and the level 2, we would have seen a very large hidden passive seller around this area absorbing very large aggressive market buy orders at the point. There was very, very heavy volume done near here at the highs, which is kind of a red flag for the upside if we do pull back. However, what really made me interested in this, I can show you what it looks like on Bookmap because this is the only market replay system that I have, is as we came up into 4147, if I zoom in, what we're going to see here is a lot of aggressive market buy orders at 4147, 4146, yet there isn't a passive seller that's really showing liquidity in the market that's going to prevent price from coming up here. over 1300 or 1200 lots hit the offer at 4147, but there wasn't a 1200 lot passive seller there really acting like a resistance or a wall for price to continue moving higher. What I mean by this is usually at highs or lows, a high is put in or a low is put in because of a lack of liquidity. When we have high liquidity like this, meaning high volume at a low or high volume at a high, based on a price perspective, not a time perspective, it's a good sign that the market will go test that level again to see the type of value that gets created. Is it fair value? Is it unfair value? Meaning, do we have a sign of illiquidity the next time we test this level? And if we do have a sign of illiquidity the next time we test this level, what I mean by illiquidity is not so much volume, or at least a volume tail on the volume profile, then yes, a possible high or low is being put in. However, if we start to see heavy volume near a high or a low, yet what that tells me is there is a lot of liquidity and the chances of a high or a low being put in are slimmer compared to when there is less volume or a lack of liquidity. So when I saw this at 4147, 4146, and the type of volume that got done here, I basically said that if we came back to test this at some point again in the future, we would go test higher prices and see what type of liquidity gets done back at 4147, 4146. And with this type of volume structure, this is a telltale sign that the market may not have a high being put in at this level, that we may revisit it in the future. And what really gave me conviction on that was when we pulled back and we bounced off the 4135 demand zone and found buyers off of this level. How do I know we found buyers off this level? Well, as the market came up at 9:47 Eastern, once the buying volume came in, as we could see right here, this gave me enough confirmation that, okay, we bounced off demand. We're starting to see buyers come into the market. We're starting to move back up to that 4146, 4147 level. I knew if we got all these factors, the odds were in my favor to go test 4147, 4146. And if the odds were in my favor to test this, and if we could get above it with strong buying volume, as you can see down here, which kind of gave me more conviction on the setup, then I knew that if we are above this, there's not much stopping price to hit 4159 supply. And then pulled back into demand, rallied off that, pulled back, found a bid at VWAP. My stop loss never triggered, which was at the low, so I had no reason to panic. And then the market continued with strong, more market buying pressure and hit supply, where I sold 90% of my position and I sold the rest when the market started pulling back. I was anticipating a little larger of a move, but we didn't get it, and this sold off from supply pretty well. I don't like flip-flopping, meaning I don't like getting long and then selling at supply, and then as soon as I sell my long position, I flip to a short position. Although that worked, some members took a short and absolutely killed it. I just took it long and sold at supply, but this would have worked very well. So the common theme with this was planned out beforehand. And again, these are the setups that we plan out for prior to the market open up. Come up with your levels of interest and see what, how, and why price reacts or doesn't react at your level of interest. Here is the NASDAQ. I did not take this setup because I was in the S&P 500. We had demand at 12863, which is this green box down here. And we were trying the same thing, inverse head and shoulders off 12893 demand. We'll first be watching to find buyers at these levels to play long. I'm going to target 13,000 first. The market opened up, pulled back into this demand zone, and then rallied right into 13,000 target, found a seller, and the market pulled back down off of that level. These are levels we plan out for prior to the market being open. These are there because of past market development. That is very key. Now, the second setup we could take are ones which are dynamic and ones which change during the market being open due to new information being presented to us. I say it all the time, the market's like the seasons, summer, winter, fall, and it's constantly changing with conditions. And with these new conditions, we must adapt and we must trade differently and according to what the market tells us. I always say, and I always stress this, do not predict the market. Instead, just react to what it gives us. In this setup, number two, These are ones which are dynamic and change during the market open due to new information being presented that we did not have in the past. The first trades that I showed you, we had that information in the past, meaning, okay, I want to play long at demand, or okay, I want to play short at supply. That was known before the market even opened up. These are ones that formed during the market open based off of new intraday development. We can't plan these out beforehand because we do not have the information or any information or just enough information to give us the structure that we take a trade off of. It's just not there. The market is open 6.5 hours a day, and during that 6.5 hours, it's always presenting new information. How we perceive this information is how we speculate a trade. That's how the market works. We can't predict. I don't wake up and say, okay, I'm longing right here because I think the market's going to go up 200 points. I react. I say, okay, we're here. Is there structure? Am I comfortable taking this? I'm going to speculate that we're going to move up, and I manage my risk. These are plans that are created during the day on the fly based off of a new level or a new piece of market generated information. It's new information that we didn't have before, and there are dynamic levels which change and we must adapt to. So here on the S&P 500, I said the same plan as yesterday. We're watching a bounce off of the 4118 and 3/4 demand. This is on August 25th, Wednesday, Wednesday, August 24th, I'm sorry. Bouncing off 4118 demand, as long as we can remain above this level, I'm going to be looking for ways to play long, targeting 4159 supply. If we get above this level, we're going to get more upside continuation. But essentially, we had demand, we didn't hit demand, but since we were above this level, the same level that we bounced off the day yesterday and overnight, I was watching for ways to play the market long. This is essentially market context, and we find ways that we could trade on the same side as buyers or trade on the same side as sellers. That is how the market works, and that's how you come up with quality setups. If you're looking to long something, you want to make sure other people are buying after you're buying or before you're buying too. Or if you're looking to sell something, you want to make sure people are selling after and before you as well. You don't want to be a first seller. You don't want to be a first buyer. You just want to make sure you're on the same side as them because that's when we're going to get that move that we expect. So on the S&P 500, simple intraday commentary. This is basically where I update my plans throughout the day. You just saw the plan that happened that I planned out before the market opened up. This intraday commentary is basically where I update what I'm watching as the market develops and my thought process behind the fluctuations of the market intraday. I said I'm watching 4135 and 4127. If it could hold on a pullback, I'm going to be watching to play the market long, targeting 4159. So here's the chart. I was watching 4135 to 4127. If we could pull back into this level, I'm going to be looking to play the market long. This isn't hindsight trading. This isn't explaining it after it happens. Everything I go over, I come up with the plan and I execute the plan based off of simple price and volume analysis. So I'm watching to play 4135 and 4127 to play long, targeting 4159 supply. This is not a demand zone. This is just based off of market structure. We come up, we rally into this level, similar to the day prior, and we have 4135 to 4127 that I was looking for the market to hold. We come into this level, we find buyers, and then the market starts moving up. At this move up, I get the market long, stop below this low, targeting supply above. We consolidate, yeah, we're choppy before the breakout, but as soon as we break above the high, nothing's stopping us as long as volume begins to increase to hit the 4159 supply zone. We missed it by 2 ticks before reversing. Kind of a red flag for me. I know I only sell when my target hits, when my stop loss triggers, but this was 2 ticks. And due to the NASDAQ being inside of supply, I said in the Discord I was comfortable with taking profits prematurely just because NASDAQ hit the supply zone before the S&P did. And then this was a good exit because the market pulled back from this. So the point I'm trying to make with this setup is this was not planned out before the market opened up. Before the market opened up, I was not watching 4135 to 4127. I didn't, if you said, Carmine, let's watch this level today, I would have said, why? You're crazy. but this is something that got developed during the day with new market generated information. I couldn't plan this out before the market opened up. This was planned out when I perceived the new information that the market presented me. It's a dynamic level and subject to change, just like the seasons of the market. So what I want you all to do, because I've dealt with a lot of traders in my community, and some of them trade really well with setups they plan out for before the market opens up, and maybe their own pre-market plans. And some have a lot of failing and losing trades for setups that they plan out for on the fly, like this second setup. So figure out, based off of your journal, now that you're aware of this, what setups you're good at. Are they ones that you come up with on the fly, like this setup that I just explained, meaning something that you planned out for during the market opened up? Or are you better taking setups that you plan out for beforehand? My very good friend, and he's actually a trader in the community, only really takes setups that he plans out for before the market opens up. If his plan doesn't come into fruition when the market's open, he doesn't change it. He only comes up with a predetermined plan before the market opens and only trades that if it comes true. He doesn't come up with levels intraday. He just watches his plan and doesn't deviate away from that plan based off of what he thinks is going to happen. I won't lie. Sometimes I take setups and I force setups and they're losing trades because I try to come up with a plan on the fly like these, and I'm just forcing something. My bias gets in the way and my emotions get to me, that sometimes I take more losses by setups like this. It's what works for you the best. You're not going to have trades that win all the time. You're going to have trades that you plan out for beforehand that lose. You're going to have trades that you plan out for on the fly that lose. It doesn't really matter. It's just what works for you the best. And whatever works for you the best, you scale up on that. That's how trading works. That's how you make more money. That's how you get better. It's not knowing so many things. It's just knowing what's right and scaling that up. That's how you have success, and that's how you make more money in the market. So go through your journal, listen to my advice, see what works for you the best. Let me know in the comments what works for you the best. Maybe we could get like a majority census of it. I would definitely be interested in hearing your thoughts. And if this video made sense, let me know. Comment if you have any questions. And I would appreciate a thumbs up on this video, subscribe to the channel, and definitely check out the links in the description below.